My name is Joel Flork. I am a senior at Michigan Tech University studying finance. One of the most important lessons is definitely learning how to coordinate a buy report like we did here with a team. It's one thing to do it individually, but as you're working together, trying to work through the financials, the business analysis, making sure that your ideas come together into one concise report is really important. And making sure that everyone understands each piece too, because it can be really easy to piece it up individually and just throw it together, but then it's not going to have a consistent voice and there'll be pieces missing out. Definitely one of the bigger challenges for us has been being able to make sure that we put in the time to make sure that this is a really quality presentation and report that we did for CFA while balancing our finance program that we have up at Michigan Tech, because they do coincide. So making sure that we're taking care of everything and meeting those high standards has been difficult, but I think that we've done a very good job. I studied finance. I'm hoping to go into the world of investing. I'm actually going into real estate investing after graduation. So it's a slightly different venue than valuing individual stocks or companies. However, working with a team in order to do an analysis of future projections within an industry is very important. So I definitely see myself taking a lot of these skills forward, especially being able to present the findings that we come forward with, because that's going to be value whatever industry you end up going into. Neogen Corporation, founded in 1982, it was through grant funding through Michigan State University. Now, the object was in order to increase biotechnology products within the state of Michigan. Now, the company was founded by current CEO, and since then, the company has continued successful growth. Now, from its very beginning, they had a small diagnostics product that was used in order to test for aflatoxin within grain feed for animals. Now, in 1989, the company went public, and in 1998, they made their first acquisition. Since then, the company has had strong financial performance and currently holds $0 in long-term debt. The company has over 1,000 employees globally and a portfolio of hundreds of products within both the food and animal safety markets. Neogen Corporation has been dubbed by Forbes, as well as many other publications, as being one of America's top performing companies. Now, before I go any further, I'd like to introduce our team here. Myself, Joel Flork. We have Tanner Agan, Brandon Hutchison, as well as Heath Johnson. Now, Michigan Tech University and our team would like to thank the judges here today for giving us the opportunity to present our analysis of Neogen Corporation and valuation of their stock. Based on both a relative and fundamental analysis utilizing a discounted free cash flow model, our team has a recommendation of a sell on the current Neogen stock price. Our price target is $21.20. As of February 11th, this represents a negative 56% premium on the position. Now, to go into this valuation a little bit further, Neogen, with our relative valuation, we have a price target of $27.59. Through our fundamental analysis, we have a price target of $19.07. After doing an analysis of the market, our team decided on a weight of 25% for our relative valuation, as well as a 75% weight for our fundamental analysis. This resulted in our $21.20 price target for Neogen. I'd now like to hand it off to Tanner Agan so he can tell you a little bit more about Neogen's business and the markets in which they serve.
Thank you, Joel. Now, Neogen develops, manufactures, and markets products within the food and animal safety market worldwide. These products and services include Acumedia, toxicology, genomics, and life sciences. Acumedia accounts for over 240 formulations, as well as over 200 custom formulations to test bacteria and microorganisms. Toxicology tests over 300 drugs, including performance enhancers and metabolites in forensic samples. Neogen is recognized for their dog breed registries within their genomics department, while their life science department tests for steroids, hormones, cytokines, and so on. Neogen has a variety of products consisting both in the animal and food safety market. Animal safety is well known for their veterinary instruments as well as their animal care products to help with the animals and their well-being. Food safety is comprised mainly of diagnostic tests to get rid of the substances, for example, like E. coli. As I stated before, these reportable segments consist of food safety and animal safety. Animal safety is comprised or represents mainly 54% of its revenue, while the animal safety market represents the remaining 46% of its revenue. Next, Brandon will go through growth and corporate governance.
Thanks, Tanner. A large part of Neogen's business model is through acquisitions. Neogen's management projects acquisition growth in the next coming years to be between 3 and 5%. Since 2000, Neogen has acquired 28 firms successfully into its own business model. Neogen, to compete with the larger firms in this business, goes after smaller firms that specialize in maybe 1 or 2 products and acquires these firms mainly via cash. They pay 1.1 to 1.3 times the sales of the last year of the acquired firm. Management has said, though, that in the future they would be open to using debt financing to acquire these firms. The other part of Neogen's business growth is organically or internally. Neogen expects to grow at a rate of 8 to 10% in the coming years. There are 4 potential drivers behind this growth: population growth, emergence of the global middle class, government standards, and a major catalyst event. As of 2013, the global middle class was estimated to be 1.9 billion people. By 2030, this number is estimated to be 4 billion people. This double of the number represents a large opportunity growth for Neogen. Furthermore, by 2030, it is estimated that there's going to be a 30% increase in quantity for food demanded globally. This, combined with higher government standards for healthier and safer food, plays right into Neogen's core strategies of health, animal, and food safety. As I said before, the final and last driver for growth from Neogen would lie in a major catalyst event. Apart from the business aspect, Neogen prides itself on being a respectable company that tries to give back to the community and globe around it. It does this through its corporate governance committee. This corporate governance committee has 4 parts to it: management succession, risk management, environmental and health safety risk, and human practice resources. Furthermore, it has 4 basic tenets that it tries to communicate throughout its entire company: respect, integrity, honesty, and ethical responsibility. Neogen believes that not only in offering quality product and services, but also in giving back to the community and world around it. I'll now hand off to Heath, who will tell you about Neogen's finances.
Thank you. In fiscal year ended in 2014, Neogen's positive cash flows from operations were offset by the $40 million acquisition of Servet, resulting in a negative free cash flow for the year. However, that Servet acquisition did help the revenues as it increased their veterinary instruments revenues by 70%. We modeled revenues, including an acquisition premium, to capture Neogen's inorganic growth, and then forecasted their organic growth by breaking down their food and animal sectors into the individual segments. We then forecasted using team estimates as well as information that management was provided to us. We then grouped those individual segments into product and service categories to be consistent with how Neogen has reported their financial statements historically. Some of the investment risks Neogen faces: government standards. Neogen provides businesses they ensure businesses that their products will meet government safety standards. And obviously, as government safety standards change, Neogen products have the risk of becoming obsolete. Quality and litigation. Neogen faces liability claims through their manufacturing and distribution channels, and these claims may or may not at times be completely covered. The food and animal safety industry is competitive, and Neogen faces the threat of substitutes coming in and again making some of their products obsolete. Lastly, Neogen has been a serial acquirer, and they have to be mindful of integrating companies which they believe still maintain their overall vision. Neogen has experienced management. Their CEO has been with the company since 1982 when he co-founded it. They have organic growth potential both domestically and abroad in their markets. As the middle class continues to grow, Neogen can benefit and increase their revenues as the consumer base grows. There's also synergy in acquisitions. Many companies offering only a single product line have their margins diminished because of large overhead costs. However, Neogen is able to use their broad distribution channels to have increased margins when they successfully integrate smaller businesses. Overall, we believe Neogen is a financially sound company with positive growth potentials, but we believe they've been grossly overvalued by the market as portrayed by their PE ratio currently above 50.
Now, as you've seen today, like we said, Neogen Corporation has strong revenue growth. It has proven financial security, as well as a management team that has been able to succeed within the food and animal safety markets. However, our job is to be able to analyze Neogen's market capitalization based on our expectations of future financial performance. This has resulted in our sell recommendation for Neogen. We'd now like to open the floor for Q&A for any questions on our analysis or valuation of Neogen.
Hi, you have chosen to have the valuation based on what, 25% based on relative valuation and 75% based on DCF analysis. On the relative valuation analysis, have you looked at some of their competitors? You know, obviously you have a lot of slides here, but there's really not much on the competitors as far as, you know, comps, as far as, you know, revenue growth rates and so forth. Will you just kind of for a minute touch on the competitive environment as far as who may be a apples to apples comparison, like a competitor to them?
So I guess just to start this question out, because there's a few parts to this, if we're looking for apples and apples comparison companies, there are two particular corporations that stand out when comparing to Neogen. One is IDX, which is a public traded company, so there is a lot of capabilities for us to be able to compare financial data. The other corporation is Charm Sciences. However, they are a private company, which limits our ability in order to make financial comparisons for our analysis. And then Heath, did you want to expand a little bit on some of the other companies we used within the valuation model?
As Joel mentioned, we created a peer group, and then we looked at, you know, we created the peer group, looked at price to earnings, price to book, price to cash flows, and all of the valuations for Neogen based off those were very consistent. So we felt comfortable using those to come up with our relative valuation for Neogen. However, we did use the 25% weight on relative valuation because we thought the industry as a whole was richly valued.
And to expand on that just a little bit further, the companies that we are looking at in the peer group, while may not be representative of the entire Neogen Corporation, were representative of smaller segments of Neogen.
On their products, do they get like exclusivity or any proprietary patents or anything like that on the products they produce?
So with respect to proprietary patents, things like that, one of the things that Neogen Corporation's management has explained to investors is that while they do hold patents on many products, the majority of their proprietary information is held within the company, so through trade secrets. So there are some potential investment risks there. However, they feel that because of their distribution network that they've established and their relationships that they build with their customers, it will be extremely difficult for any company trying to come and compete with one of their individual products to be able to capture market share within that space.
How are they valued price to sales wise right now?
We're not, with respect to the actual multiple of price to sales, offhand, we don't remember. It is in our analysis. However, as you can see through the chart here, the price to sales does put a valuation of $30.16 on Neogen in comparison to their peer group.
What are sales last year? Sales last year approximately?
I believe they were around, and I'm trying to remember if it was our first forecast for last year, around 200 million.
And what's the market cap of the company?
1.7 something billion.
1.77 billion.
Okay.
So what's price of sales again, roughly?
It would be, it's that 1. Yeah, about 1.8, 1.7.
Most of their acquisitions, or at least a good portion of acquisitions, is my understanding, have been in the animal safety side of the business, which has quite a bit lower margins than the food side of the business, roughly 10 points. Have you been able to look at margin trends of the business and just kind of think through why management may be spending a lot of their money on the animal side versus the food side with respect to acquisitions? As far as size of the market, potential size of the market, or?
With respect to margin trends, we did not look at anything in particular. However, in our valuation models, we did use estimates for the growth within those markets for utilizing our fundamental analysis.
Did you have a chance to meet with management or investor relations?
Yes, we did.
Okay, and was the CEO 75? Any other input from the way that the management handled themselves and their history of acquisitions as far as valuing the company in the future? So kind of the past being helpful to the future there?
We didn't get to meet with the CEO. We met with Steve Quinlan. As far as past acquisitions leading to future, they did mention they like to remain in a little bit smaller acquisitions, which is what they have done, with the exception of the Servet, which was a little bit larger acquisition. Mainly because then they like to take individual mom and pop shops and introduce one single product into their distribution channels, and they think that the margins on those products for the other companies, they think that putting them into their broader distribution channels, they can save money and create higher margins on those products.
One of the things they also mentioned with respect to their acquisitions and how management deals with that and plans to deal with it moving forward is they do have basically a training set up where they are focused on having their top managers moving one of them into a position of running one of the acquired companies for typically, I believe they mentioned between 1 and 2 years. So that's something where we feel has been a very good track record for Neogen of being able to execute with that strategy, and we believe that they'll be able to continue to execute well moving forward.
So most of their acquisitions, though, have been paid with free cash, correct? And you had mentioned that they may do some M&A with some debt financing, which may not be a bad idea with rates so low. And, this is the first time that we've heard of that, because the other couple of presentations, had not mentioned that. Was this something that came up in the meeting with the IR guy, or?
This was a specific question that we had asked management because, as you mentioned, there are definitely some good benefits, especially now, that could come from utilizing debt financing for the company.
Yeah, because most of their acquisitions have been in the $10 to $25 million range, which is, that's very small. Have they talked about maybe, going up market, looking at larger companies, or not?
One of the things that the management said that they were focused on is expanding into international markets. They've been working in China specifically. However, they've been having a lot of struggles. One of the areas that management is starting to focus internationally is looking at the Indian market, and they expect to work their way into that area, that region of the world, through acquisitions. So we see a potential for maybe a larger acquisition for being able to capture some significant market share and get their feet on the ground in India.
Okay, as a follow-on to that, how would you compare the regulatory environment internationally versus domestically? And would you consider that a positive or a negative, increased regulation?
So our team, as we were looking through our valuation and thinking about some of the risks, as developing markets like China and India have growing middle income classes, and the governments are going to continuously adapt their regulation to be able to meet expectations and needs, we do see increased regulation helping Neogen's products to be able to be successful in those markets because of the nature of their business, diagnostics tests, things like that, to make sure that the food going to market is going to be safe for the consumer. So we see that being a huge benefit for Neogen Corporation.
To add on to that, Neogen management said in their last annual report.
Thank you very much.